Hello everyone, it's Davide here and welcome back to Learning Finance. So in today's video guys, as I get many comments asking me what do I think about this situation over there, well, instead of just replying every single one of you, I'm gonna do directly a video so I can better explain what I think about this situation where basically the House to vote on booting Chinese stocks from US over audit rules. Okay, so we have these kind of problems where in the United States they are asking Chinese company that if they want to continue to be listed on the Nasdaq or on the New York Stock Exchange, they have to agree to audit rules where US operators are able to do a sort of a double check to what Chinese accountants are saying regarding their company. So I'm gonna try to explain what I think about this and whether it is risky if you are invested in Alibaba, JD.com, or even NIO, for example, is a Chinese EV company as well. And the same problem. So the only thing I ask you guys as always is please leave me an early like. It's very important for me and it doesn't cost you anything and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. So first of all guys, before I actually start this video, I would like to remind and put clear one thing. In this channel, everyone is completely welcome, okay? I am completely neutral to every kind of politics stuff. I am from Europe. And in this case, I'm talking about US and Chinese stuff. My point of view is 100% as an investor. I absolutely do not take any part between them. It's not my interest. My interest is just to be a guy on YouTube which has to invest a little bit of money and try to make a return. For me, everyone is the same and everyone is welcome here. It doesn't matter where you're from. The overall goal is to try to make some money from investments, okay? And not to determine which country is better and stuff. Is not my topic. So just to be clear on that. And now let's take a look at what is happening. So we have these issues as I told you. So this is from November 28 and lawmakers next week are likely to force Chinese companies with shares trading on American exchanges to finally comply with audit oversight rules or leave US markets altogether. Okay, so and House leaders plans to consider a measure on Wednesday that would force Chinese firms such as Alibaba Group either to make the transaction to get in an annual audit that is reviewed by US regulators or move the shares from trading in the US. The House plans to vote on the rules that limit debate and require a two-thirds majority for passage, according to an online notice posted Friday. So the legislation, if it becomes law, will give Chinese companies and their auditors 3 years, and this is very important, 3 years to comply inspection requirements before they could be kicked off of the New York Stock Exchange or Nasdaq. Chinese officials have criticized the bill, saying that there are better ways to resolve differences between Washington and Beijing over audit inspections, and that delisting Chinese company will harm US capital markets. On this other article over there, Investors Business Daily, basically we can try to realize which one are the different ways. In August, a policy group led by Treasury Secretary Steven Mnuchin offered a more lenient approach. To get around Beijing's refusal to let the PCAOB review the work of Chinese auditors, Mnuchin would permit Chinese firms to engage a US accounting firm to do the job. Okay, so, and critics of Mnuchin's approach argued that US accounting firms couldn't vouch for the accuracy of the second-hand data they will get to review. On the other hand, Wall Street has billions at stake in revenue tied to China stock issuance and trading in the US. In the coming weeks, Securities and Exchange Commission Chair Jay Clayton may bring Mnuchin's more flexible approach up for a commission vote. But the big question is what Janet Yellen and the incoming Treasury Secretary and President-elect Joe Biden think. Mnuchin would have attempted to strike a 2021 deal with China to avoid the scheduled delisting. I don't know how Yellen and Biden view this. So, for example, for Alibaba itself, we have had a rough November, okay? Because first of all, Ant Group, so Chinese regulation, Jack Ma was too much on leverage. Chinese president say we don't like that, and so you're not gonna do the IPO. You're gonna follow the rules that we are gonna give you, and that was the first thing, and the stock dropped from 300 to 250. And now investors started to realize, okay, probably that was an overreaction. Alibaba is a thing, Ant Group is another thing. Alibaba's business is good, so you know what, let's buy back the shares. And we saw a stock that went up, and then that happened. That basically this candy firm company, Chinese company, basically was fraud, and that made all of them to come back to this. The thing is that the bill has already passed the Senate in May. So it's very likely that probably they can make this thing go to the end. In my opinion, now let's forget about US and China. Let's talk general. So information, guys. Information is very important in the stock market. And if we just think general and we just forget about China, we had many examples where information failed. Just think for a while. Just remember Nikola Motors, what they have done, okay? And they are not Chinese, but there are a lot of examples where information is not transparent enough. The main problem is that for investors, especially if you are not an institutional, which basically you don't have that much quality information available because we are at home with our PC and everything we can see is basically in their balance sheets, okay? And we cannot know more. Or when they do their earnings call and reports, that's what we have. And then we have articles, but most of the times I actually question myself whether what are those people writing? Is it completely true or not? Or so from a retail investor's information, getting the right information is not easy. And we had many examples about this. For example, I am from Italy and we had Parmalat 7-8 years ago and they went bankrupt, okay? But everything looked fine until the moment when they went bankrupt. And basically they were making fake balance sheets, and then they have an audit firm that should have been somewhat impartial. In reality, they had an interest to say, well, everything is right, but in reality it wasn't right. But then even in the US, we had many examples of this. I think the most incredible one is 2008 financial crisis with CDO. Like Standard & Poor's, they were saying, oh, those things are mainly AAA. Everyone can buy it. It's the safest thing I ever seen, until the moment where basically everything collapsed altogether. So, and once again, as a retail investor, you don't know those things until basically the moment where you get hit like a train, okay? Like you are standing on the rail and a train comes to you, boom. So pushing more to the quality of information is always a good thing for overall, okay, the general market. So overall, in general, despite the fact no matter what country the company is based in, I would always prefer as an investor, as a retail investor, to have a double check on everything from a company which doesn't have an interest in what you are doing, okay? So despite the fact whether a company is from Italy, France, US, Germany, China, Japan, I don't care. If there is someone that doesn't have an interest and would double check what they are saying about that company, for me is just something that it's very important as an investor. Actually, give me confidence in investing in that company if things are correct. Overall, the quality of the information is a key. And basically, if you want to get listed in the US, you need to have this kind of audit rules. Okay, you have to accept them. Now, in 2013, the US accepted to list Chinese company, even though they were not respecting 100% the audit rules. Now, they want to change that as of now. The most important thing for us is to understand in terms of economy how this thing will go. And the fact that in the short term, now they are kind of arguing each other, and that makes sense, but the United States didn't say by next week we are going to delist your company, because they give 3 years. Okay, so 3 years. And in these 3 years, my opinion is that they will find an agreement and they will make things go as they should go, because it is something that you should look at incentives. And incentives, in my opinion, are that everyone after the short term of flexing muscles should actually consider the fact that an agreement would be a positive thing for everyone. So I think that in the long term, all this situation will be solved in a positive way. And if that happens, all the dips and turbulences that we are seeing today, then they could be considered as a good entry point, because companies like Alibaba, in terms of business, I don't think that the data they say it's fake. Okay, I mean, this kind of growth, this kind of earnings, is this fake? I don't think that. In my opinion, it's a legit business. And in terms of business itself, it is super undervalued as of now because of regulations from Chinese government, and then the issue with the listing and stuff. Investors are just worried about factors which are outside the Alibaba business itself. We are kind of at the beginning of a new cycle, in my opinion, for China. We have seen that over the past years, they have managed to demonstrate the world how a big economic power they are, how quickly they can build a city, how quickly they can build wherever they want, streets, roads, buildings, machines and stuff. It's impressive. That's very impressive. I think that the next cycle for China will be to become also a financial power, because very great and healthy stock market helps also the economy part of the thing, because you can get investors and you can get money, actually, funds and stuff, and that's important to push the economy. However, to do that, I think that overall China should be more open to the entire world. And overall, these rules, okay, despite the fact whether they are from US or Europe or other country, trying to have a double check, trying to be more open with investors, in my opinion, should benefit China too. So overall, even though right now it looks a little bit of a difficult situation, I think that in the long term, those people are smart enough to actually understand which is the better thing. I think that they will understand this, and after some flexing muscles and stuff, they will probably find an agreement. Let's see how this situation will go. And so this is what I think about it. So now you have the answer. I hope you find this video interesting, guys. Leave me a like and leave me a comment below. Tell me what's your opinion on this. Are you scared about that, or do you think it will go away in the long term? So subscribe to the channel, and as always, guys, have a wonderful day.